What is up, everybody? So, first of all, I want to thank everybody for joining me, whether you're watching live or you're watching the replay. Okay. But the first lesson today, and we'll cut right to it, is the value of money. Now, let me explain what I mean. When you go to a casino, you cash in your money and they give you chips. They give you chips with different colors, but they feel the same. The point is, when you're making a wager, you're making it with chips. You don't know whether you're betting 100, 500, 1,000. You drink a little, you smoke a little. The same thing is true in the market, okay? You have 5,000, 10,000, 20, $100,000 in the market. You don't really understand the true value of money. You go out to a fancy dinner, you spend a few $100s, you get you do all your bills and shit like this. Understand that if you're making a few hundred to a few $1,000s a day, that more or less covers it, and you're at the top of your class. So understand and have appreciation for the value of money. It's not like, hey, I want these calls, and you go in and you just purchase something. You need to do your due diligence. You need to think about it. All right, so today's lesson or today's live stream is going to be all about stocks on my watch list, which I have out right here. I'm going to go stock by stock. I'm going to tell you why it's on my watch list, what I expect out of it. And I'm going to ask you guys, if you want, you can open up Webull or Robinhood or E-Trade or whatever you use to trade. You can look at the 1 month chart with me, because when I pull up the 1 month chart, I will tell you where it could pull back to in a bear market and where it could, ascend to in a bull market. All right. So number one is Ride, Lordstown Motors. Okay. It's on the top of my watch list because I took a lottery play on Ride today. Actually, we should skip. Now we'll stay with Ride. All right. So Ride first. Why? Because I saw heavy demand. I saw some buying activity. I saw some call spreads came over that had unusual activity. Now, here's the catch. They actually go out to like October or November. So they're giving themselves more time. I'm looking for more instantaneous gratification when it comes to Lordstown. Okay. The next stock, which is actually a good entry point, got very beat up today. It's Sgfy. All right. It's a drug company, and they're like Edit and Intella, the gene mutation company. So the point is, Kathy Woods has a position there. The stock pushed up from about 24 to 27. So today's decline of 2.8% was just retracing. So I believe that one has a good outlook. I'll look at the 1 month chart on that one, and I'll tell you that it looks like it could definitely peak back to $30 within the next 2 weeks. So it's at $26 now. So a $4 move from $26 is about 16%. If you were to buy options and you go out a month or two, you're looking at 100% return. All right, let's go on to another stock on my watch list. Louisiana Pacific, LPX. Now, this is a stock that moves with the Dow. If you look at the 1 month chart, this stock had 9 straight inflow days. The chart looks like that, a diagonal triangle up. It's LPX, 9 straight inflow days. So what happened today? There was selling today. The Dow was off. The SPY was off. It wasn't at an all-time high. So the stock retracted. So the stock went as low as 63.33. It's now 63.44. Now, here's the point. Somebody on my platform mentioned, hey, if we have a sell-off day tomorrow or the rest of the week is hurting, where could this stock go down to? It could drop another 5%. So it could drop to $60. So I haven't taken a position in this one. I'm just watching it because I'm assuming if outflow was today, that we might have outflow tomorrow. And if we do, instead of entering at $63.44, I will get to enter into options maybe around $60 or $61. Okay. So that's LPX, okay? And that'll move more with the Dow. And again, today was a little strange with the Dow because the Dow was stronger, tech was weaker. And then I went on, and I only told lifetime members this because it happened at like 3:50 p.m. But people were buying tons of QQQ calls, meaning it was very bullish for tech. And then what happened right as QQQ fell, all of a sudden it spiked at the end of the day. If you look at the inflow at the end of the day for the QQQ or for the NASDAQ in general, extremely strong. So what is that telling me for tomorrow? Tech's probably going to be strong. Doesn't take a freaking genius to figure that one out. All right, next, I have Robinhood on here. Why? Because institutions weren't trading Robinhood today. Retail traders were trading Robinhood today, and Robinhood, I think, was off like 4%, 5%, and then ended up on the day 1.5%. Now, here's the catch. Institutions are shorting Robinhood and have put options. I know this for a fact, so I'm not really sure why they let Robinhood go up to 44.32. I guarantee there's a game plan in action. So I like to watch Robinhood. Next, I have Trade Desk TTD, which was a favorite of ours, okay? We watched Trade Desk go up to 90, then retract back to 78. Trade Desk is back at $80, okay? I think it actually touched 81 today. So here's the great thing about Trade Desk, okay? It usually spikes a little at open, and then it drops hard. And if you look at the one day for Trade Desk, let's just look at one day right today. Where is it? Okay, there we go. It spiked a little open. It went over $80 and like 16 cents, and then it dipped hard. And then what did it do? It recovered. So from $79.17, Trade Desk went over $81. Now, the whole thing is, the reason we secure profit is when we write Trade Desk up, say we got in close to the bottom, 79.20, 79.25, and we bought call options for an $80 strike, and then it goes to $81. We're probably up about 60 or 70%. Now, unless there's news coming out for Trade Desk, it's not going to pop to $84 in one day. So when it rides up to the top, which happened to be $81 and like 2 cents today, you could sell and look for it to retract. You could do this for any of your positions. And I'm going to talk about what I did today when we get up to my stocks that I have positions in. Because somebody, this is great. Somebody on my platform called me out this morning. I'm going to get right into it right now because I was a little miffed. I gave out 2 trades yesterday, GLD, which is the gold ETF, and I bought options at $1.26. And after I alerted the options at $1.26, the 169 strikes on that, GLD, right, the gold ETF. This morning, it was at $1.50. I sold because 20% was good for me. Then it dropped down to 96 cents. I entered into a new position, and I was looking to sell for $1.58. It did not get executed. But at the end of the day, the $96 contracts that I purchased and that I alerted on the platform are selling for $1.36, which is up, 38%. So for that one dude on my platform who decided to call me out this morning and be like, after I posted what I did with my options, was like, yeah, GLD is a piece of crap and Carnival's a piece of crap. What I told him and what I will tell everybody else is when there's smart money buying these options, okay, you have to zoom out. So it's not instantaneous. We got into Carnival, and what did Carnival do this morning? It dipped like 40 cents or something like that. The options that were like 38 cents became worth like 25 cents. Do you know what happened after they became 25 cents? They went up to 50 cents. They doubled. So as I told the individual, I must have responded back to him about 8 times. I was like, dude, zoom out. Watch your mouth when you make comments because it's like a family. We're all community. We're here to help each other. Even on the live stream, the questions that you guys ask on the side, I provide the answers so that everybody benefits. All right, that's the whole premise. It's like a community learning. Everybody gets smarter. Everybody has a different light bulb moment. Everybody's at a different trading point in their career. Some people are 20-year traders that are doing call spreads and straddles and things of that nature, and other people haven't bought an option yet. So that's what the difference is. Okay, point is, zoom out. If I tell you people are buying Carnival $24 calls and we get in, they paid $56. We got in at $46, and then we averaged down, I did, at $38, bringing my average to $42. I sold today for $50. I sold for a 20% gain when it comes to Carnival. All right, next, Goldman Sachs. I gave this one out yesterday. It was off 6% yesterday. And I don't know if it had to do with a dividend or something like that. I know financials were beat up yesterday, but nobody as bad as Goldman Sachs. So that's GS. So what happened today? Goldman Sachs went from 412, which were my strikes, 412.50, all the way down to $408 today. And then where did it end up? Well, right now, I think it's like 413.51. It ended up 0.5% today. So again, if you're following my watch list, is what I'm talking about today, and you see one of my stocks that I mentioned I like dip down hard in the morning, instead of saying to yourself, God, I'm so glad I didn't get into that play that Matt got into, say to yourself, if he liked it when the option contract was $280. He probably loves that shit now that it's $190 per contract. All right. Create a sale for yourself. All right. Next, I have GLD, which is the gold shares, ADR. Point is, it's at 169.69. When I alerted this one yesterday, it was at 169.28, and then it fell to 168. Actually, today it was 168.75. Okay, so it's up almost $1. Now that's pretty significant move for gold ETF, and that's why you can claim 30%, 40% profit when it dipped this morning. All right, so that's next on my list. And I just have that the same way I follow cryptos, I like to follow precious metals, especially since our government just keeps printing money. All right, next, I've got BBig, which I've been speaking about for a number of the days. Now, I didn't bring up BBig. Again, I want to pay homage to Alex in our lifetime membership platform. He brought this up. It was like $3.15, and he was talking about a short squeeze, and then it went down to like $2.58. And I said to Alex, dude, this chart looks like shit. What the hell are you seeing? And he didn't answer me, but I figured it out. He was talking about a short squeeze. Now, here's the great thing about BBig, right? It's got a low float. It's got low shares outstanding. The price point is right in like the $7 range. So it's kind of affordable, the same way AMC was. All right. Now, here's the catch. Shares borrowed, right? So the short interest has actually increased. They borrowed like 10 times the number of shares they returned. So if you're short on a stock, and you think it's going to go down, but you need to buy back, you'll be like, okay, I'll return my 100,000 shares that I shorted. So somebody's returning 200,000 shares and somebody else is borrowing 2 million shares. Now, understand the float on BBig, I think is like 40 million. Maybe it's 24 million. Let me get this straight. No, it's 65 million, okay? And the turnover was 272%, which means if they have 65 million and it's 272, I guess about 180 million shares were traded. The point is, if you're holding BBig like I am, I've got about 7,000 shares right now. My average price sucks. I was in at $7. I could have been in at $4.50 on Friday, and I didn't want to have FOMO. I didn't want to chase. So this is the one time it didn't work out. I'm in at $7. It's now $8.15. Now, it was as low as $5.51 today. So I was off about $10,000 at some point during the day. But what do? I mentioned this when I shot my YouTube video on BBig. It was just like a quick 10-second thing. We zoom out. We back up. A lot of our lifetime members had leap year options on BBig because when it was $2.60 or $2.70, they went out to January. They bought like the $2.50 calls. And then when BBig spikes, their $1 investment's now worth like $4 or $5. That's a huge return, 400 or 500%. Okay, I don't want to focus on just BBig, but I know a lot of people got into that one. All right, next, APPH, okay, at Harvest. Now, this is the same as the stock that I mentioned earlier, that Louisiana Pacific stock. Now, again, Louisiana Pacific will trade around the Dow. This will trade around the NASDAQ. The NASDAQ's a little stronger. So I think this stock will actually bounce sooner. So it's $8.40 at close. If you look at the 1 month, it rotates inflow, outflow, inflow, outflow. You got what I'm saying. Today was an outflow day. It dropped 19 cents. That's nothing. It was actually holding strong at $8 and like 60 cents, 70 cents, 80 cents. I looked at the chart and I'm pretty sure, and you could snapshot it. I haven't said that in a while. APPH at $8.40 will be over $10 within the next few weeks. Now, remember, we're entering to September. September, the volume picks up. So I'm pretty confident that you'll get a 15 to 20% rise out of APPH over the next 2 weeks. Okay, next, Carnival. So I got reamed on Carnival. Now, I mentioned Carnival yesterday, okay? It was at like 23.83 or 85 yesterday. And I said, somebody just bought a shitload or a boatload of call options that expire this Friday with a strike price of $24, and they paid $56 per contract. So what do? It's the same way when I give out an alert. Hey, I paid $56. So that douche paid $56 and I paid $46. And then it went down. I paid $38 to get my average to $42. And then I sold at $50, a 20% gain. Now, I had a bunch of contracts, so that adds up. I don't care if you had one contract or 100 contracts. If you make 20%, secure profit. Make 20%, secure profit, and repeat the trend. you're going to be a winning trader. You're going to have a winning mentality instead of entering into a trade and the first thing you're thinking about. And if this is you, I apologize. But if you enter into a trade and the first thing you're thinking about is, I just paid $280 for this contract. Did I pay too much? Shit. It's down to $240. Should I sell? So if you bought a contract and you're thinking, the first thing you're thinking is, should I sell right away because it's down? Then you're not really confident in that position. If you buy a contract, whatever it is, you should have a plan. Like, okay, I bought it for $2. If it goes to $3, I'm going to sell and make 50% profit. However, if it retraces back to $1.20 and it's off 40%, I'm going to buy 2 more contracts. Let's not forget about that episode. Episode 37, how to average down with options. Okay, it works in the short term or long term. Meaning, if you have options that expire on Friday and you're in the SPY and you're losing money and you average down and then you get a bit of a spike, you can sell. It works for ETFs like that. All right, so I mentioned Carnival. Now, why is Carnival on my list? Again, it's a Dow play. It's a recovery play. Carnival, I've got Delta, I've got American Airlines, I've got JetBlue. They all kind of just run together. It doesn't mean that I'm interested in investing in them. What I do with my watch list, now pay attention. What I do with my watch list is I'm watching it. And when something falls off a cliff and I say it's oversold, or something spikes and I say, holy shit, it's overbought, then we take the opposite position. And I'll mention one stock right now. A firm, AFRM, entered into a contract or a deal with Amazon. So AFRM went from like $60 to $70 to $100. Now, today wasn't a killer day in the market. In fact, the markets were red by a little. So what are people going to do? Secure profit. If you're in at $64 and that shit goes up to $100, you're going to sell. It's probably going to retract 10%. So it probably went down to $90 at open. And let's just check it out. Affirm, AFRM. And that's what I want you guys doing also, making predictions. So I just said 10%. It was probably $90 at some point today. And that's exactly, the low was $90.28. So when you say to yourself, oh, this shit spiked, and you could have done the same thing with Upstart, right? When it spiked to like 230, you could have said a good retracement for Upstart would be for it to go down like 10%, like $22 back to like 206, 208, 210. And it did. And now it's back at like probably 225 or 230. I don't know. Let's look at Upstart because I don't want to seem foolish when I tell you guys that it's at a certain price, and it totally isn't. All right, it's at 229. All right, so that was perfect. I said 225, 230. The point is, Upstart retraces because people sell and take profit. Now, the people that pushed Upstart from 125 to $220, these institutions have long-term holds on this position. They think Upstart will go to whatever it is, 275, 280, 300. They're looking for a 40%, 50%, 60% return. So if you're in a company like that, or a stock or an option, you've got a pretty good support. So when it touches down, it usually bounces back. You'll see the same is true with Moderna. And I actually gave out an alert. I hope I don't make myself look foolish again, but it's transparency. I gave out an alert to Pfizer. I don't remember what the first 2 digits were, but it was something 33, and then it went down to 31 cents. But people were buying up the calls at that point. Oh, 46.07. So it actually went a lot lower. It went 30 cents lower than that. And Pfizer's been selling off for 1, 2, 3, 4, 5, 8 out of 10 days. And I'm sure Moderna looks the same. I'm sure all of the biotech companies look the same. I know Johnson & Johnson have more products, so it wouldn't surprise me if that looks a little better. All right, so that was Pfizer. Just hopped in there. I don't really still like biotechs unless I think I could get a good run out of them. And right now, they're pretty much all valued out at where they are. Okay, next, after Carnival, I've got Tesla. Why? Because Tesla's a freaking beast. All right, the other day, and what was it? Yesterday, right before close, there was heavy Tesla buying. There were heavy call contracts buying. I mentioned this, right? And then if you saw Tesla this morning, I'm pretty sure it dropped it open and then spiked up to 740. Now, let's remember my contracts from the other day from, I don't know if it was it Monday? Was it yesterday morning? It was, because I got my license yesterday. My contracts that I bought for Tesla yesterday, when Tesla was 717, I had the 735 was a strike, the calls, and I paid $3.75 all the way to 4.25. All right, so now do the math. Tesla was 717. Now it's 740. My strike is 735. So my options alone right there are worth at least $5. And then I have the intrinsic time value for Wednesday, Thursday, and Friday. I'm pretty sure those $4 options are probably in the range of, I don't know, $14 now, $15. Why not look? I have Tesla open right here. So again, and the reason I went out to 735 on my call options was first, they were $4, so they were very damn affordable. And I knew if I was correct about Tesla and I get a 20-point move, that my options would make 200%. Now, remember, I only sold for 120%. I was in the trade twice yesterday. So I didn't carry them forward to today because I don't like to risk that. Oh, actually, they're a little less than I thought. They're $8.70. So, okay, they were as high as $11 or $12 today. Point is, when Tesla spikes to 740, don't get greedy. Sell your contracts. If you're in for $4 and it goes up to $11 and you're making 200%, I don't care what the contract is. Get in, get out, secure profit. All right, next on my list. And why do I have Tesla? Because Tesla has such huge demand right now. And I'll look at the 1 month of Tesla, and it's got 4 out of 5, and let's say 5 out of 7 inflow days ever since Tesla was like 680, and now it's 735. So it's $55 higher. So here's the thing. If the market stays strong for a full 3 or 4 more days, Tesla will be pushing $765, a whole $30 higher at some point this week. So Matt, why didn't you hold on to your contracts? If it pushes 765 and you had the 735 calls, that means they're worth $3,000 per contract. You paid $375. Are you an idiot? Yes, I'm an idiot. That's what it is. And I'm sharing with everybody because, like you guys, I have FOMO and I have like this fear of my shit's going to drop. Like all of a sudden, Tesla doesn't drop out of the sky. But now that I bought into these contracts, I think it's going to drop out. So I go and I say, okay, I've got these $4 contracts. I'll secure $7 on them and I'll make like 70%. And I secure it. Lo and behold, a day later, I could have got 200%. Shit happens. It's all about securing profit. The last thing I want to teach you guys is to ride the elevator up and down because you just get nauseous. I don't care what age you are. If you're riding some shit up and down. All right, next, I have Nvidia. So Nvidia, I added to my watch list a couple of days ago because I saw some puts coming in. Nvidia was like 230, then 228 yesterday. Then it was as high as 226 today. Now it's 223. It settled at. It was as low as 221. There are put contracts. I don't know how many contracts are still open, but I do know Nvidia spiked up pretty hard. Let's remember, this was a 4-for-1 split. So the actual price of the stock is like just under $900. And let's remember, this stock was like $750, $770. And that it even moved from. It was actually like 5 something, 6 something, then to set. So it being at $900, that was like when Tesla went to like, whatever, $2,400 a share or something like that. It was ridiculous. It needs to settle down. Next, I have this on my list. I almost gave the alert the other day, and then they just got included. The company is Perforated Food Group, PFGC. Again, PFGC. But they moved up 5% today because they just got introduced. Them and APPS got introduced into some exchange. So all these mutual funds and other exchange-traded funds have to buy up the company. So I almost gave it out yesterday. It was like $43 and change. It's $50 today. I am so pissed. Now here's the reason I didn't give it out yesterday, because volume on the options was so low. So you guys know when we trade options, let's say it has a $50 strike, there would usually be like a few thousand contracts open, maybe a few hundred. This stock had like 51 here, 23 here, 36 here. So it wasn't really in play. So in order for me to pick up something on the cheap, somebody would have to sell it to me as the stock was going down. So I didn't even try on that one. Next, I have Sava, S-A-V-A, right? Because we all know cassava was like, what, $60. It dropped down to 48. Now it's rebounded to 56 and change. So I'm watching it. Once it breaks the 62 level, then it becomes more interesting to me. So people say, hey, dude, it's like 56 and change right now. Why isn't it interesting to you now? Because at 56, I can see it going back down to 50 as easily as I can see it going back to 62. So once I determine that Sava, S-A-V-A, has more of a bullish undertone for me, Because right now you could just be seeing a dead man's bounce, meaning a dead cat bounce, meaning the stock dropped from the sky. I think it went down from like $90 to like $48. And then people buy. They're just bottom feeders. They're like, oh, this is bottom. Let me eat it up. Let me eat it up. I like to make sure that I'm 100% calling the bottom, or at least as close as possible. Then I've got Roblox. Why? Because I love trading Roblox. That shit goes from $75 to $90, and that's the range. So if I see something interesting on Roblox, understand it can move 4% in one day. So 4% move in Roblox up or down is about a $3 move. So if I can call the top on Roblox or the bottom, it's a stock that I know like family. So if Roblox is off 4% one day, I'm buying calls. If Roblox is up 5 or 6% another day, I'm buying puts. I love the company, but I love money more. Okay, then next, I have got a bunch of banks. I just keep them all together. Bank of America, JP Morgan, Wells Fargo, Morgan Stanley. I've got Root, the insurance company, but I actually should remove that. I only have it on there because it's a meme play. And if I catch it early enough, I'm sure I can make 10, 20, 30% when it finally moves. Then I've got Affirm Holdings, which is the company that I mentioned that entered into a contract with Amazon and spiked up from what, $74 all the way to $100, right? No, it was actually $68. Then off rumors, it spiked to 74. And then from 74, it went to 100. Like I said, 10% retracement this morning. So from 100 to 90, and then you could start buying again. So it ended at 96. So imagine if you make the prediction and you say it's at 100. If the market's shit today, whatever stock it is, there's a 10% retracement because the stock's been moving. So you go, okay, $190. That's a good point. So when you see it at $90.40 or 50 cents, and everybody else is like, oh my God, the stock's throwing up on itself, you're the one that goes, I know that stock like family. I made the prediction that it was going to go down 10% at some point today. And when it goes down 10%, I'm buying. So if you buy at $90 and now it's up to 96 and change, okay? So 1% is 90 cents. It's up what, like 7% since it's low. So if you're in options, I guarantee you probably made 100% return on that one. That's why it's important to have a watch list. That's why it's important to say to yourself, I really like Affirm, but I don't like it at 100. I would like it on sale if it goes down to $90. So the same is true for any stock. And I'll use my example for the next stock. Okay, I've got Vail Mountain here. So it's MTN. We all know Vail. We all go skiing out west, something like that. But if you look at it, for about a week ago, it touched about 286. Now it's at 304. Now, Vail tends to do well, or MTN tends to do well towards the latter end of the year. So as we go into September, October, November, December, it's going to do well. Then if you hear about major snowstorms that are covering Colorado mountains, they're going to do extremely well. It's crazy. It doesn't mean more people are skiing. It's just people's mentality. Oh, it's the same thing. Here's a trick of the trade right here. Disney. Every year around Christmas time, Q4 and into Q1 of the next year, Disney goes up. It's on my watch list. It's way at the bottom, but that was MTN. Then I've got another meme stock that I won't mention. Then I have the SPY, because the SPY is very important. First off, the SPY only seems to go up, just like the UVXY only seems to go down. All right, then I've got Snowflake, because that's an institutional play. Snowflake's a very expensive stock, $208. It's a 4-letter stock that revolves around the NASDAQ. So I know institutions love to trade that stock, and they're trading against each other. The same way I mentioned retail traders for AMC trade against each other, institutions trade against each other. They try and get the one up on each other. So I watch Snowflake, and when I see Snowflake was under 300 today? Yeah, it was 294 this morning. 294, it's up to 304. So it's up 3% or $10 from this morning. The volume was off the chain. The same volume that pushed it to $304 on 8/26 we had again today, which was September 1st. The point was, if it's on your watch list, you're waiting for it to go down. So you had your chance for 2 straight days when it was at like 294, 292, 295. Now it's at 304. Where's it going to be tomorrow? 310 or 311. Snapshot it. All right, let's see what else we got here. By the way, if you appreciate me sharing my watch list with you, if you're getting value out of this, please click the like button. You're more than welcome to subscribe. I'm going to start doing YouTube again, where it's like every day, Monday through Thursday. We'll skip Friday because it's the goddamn weekend starting. And I'll try not to do many slides. I'll try to make it important, where no matter what I'm talking about, You guys are getting information. So right now, I think that was Carlos's idea. Maybe he said that. All right, he's taking credit. The point is, I know you guys want to know about my watch list. More importantly, I know you want to know why I have certain stocks on my watch list. Okay, you know what? I'm going to go to my platform today, and I'm just going to go out to a couple. We'll end it here, and then I'll take some questions. I want to just go out to a couple of the posts that I sent out. So the Be Big Squeeze, which I alerted to, BBIG, because they must have purchased about $1 million worth of options going all the way up to $20. Yes, so if you remember GameStop, people were buying options all the way up to $700. And you know what? My friend had a couple of those he paid $1 for, and he sold them for $20 a piece. The $700 calls on GameStop when it was like 400 and change. Who the hell thought it was going to 700? Definitely not me. Next, my alert on GLD. So here's my trade again. I was in at $1.26 after I alerted it yesterday. It went down to $1.06. I didn't buy any more yesterday. On the spike this morning, I sold it at $1.50. Point is, anybody that got in after me yesterday, say you got in $1.10, $1.20, spike to $1.50, you just made 30% profit. Say you did not sell your GLD options and you were bitching at me. God damn, Matt, it just went down to 168.75. That Matt, he's a son of a bitch, right? That's what you're saying. You're thinking this morning, at least that one dude that reached out to me. So here's the point. If you didn't and it goes down and the contracts are like $95 each, I only know because I bought some at $96. So it goes down. Let's say you're still in at $1.26. You get in at 96. Your average is $1.16. When it goes up, and I bet it's like 144 right now. I won't even look on my phone. But the point is, if your average is $1.16 and it's 144 right now, you're up about 24 or 25%. So rather than bitching and complaining, hey, Carnival's down. You know what you should have been doing when Carnival was at 23.53 or 57 this morning? 23.57. Now it's over 24.11. Okay, it's 60 cents higher, 3.5% higher. Instead of bitching about Carnival this morning, instead of bitching and complaining about it, you should have said, SPY is going to turn around. It's going to look strong. Let me buy some Carnival options and let me get out of that position when it crosses $24, or you can hold on to it. That's what you should be doing. All right, next, LPX. I already mentioned that. I mentioned this morning there was aggressive buying. I mentioned BABA calls, NEO calls. NEO was at like 37 and change, and then spiked over $39. Okay, we're going to get to like 5 or 6 minutes of questions because I know I've just been rambling on. My watch list goes on. That was half of my watch list. Maybe if you guys like this and give me thumbs up, I will do the other half of my watch list tomorrow. But I definitely want to answer questions because I know you guys have questions and you get upset when I don't answer questions. And you're like, I watched this whole live stream. You don't answer any freaking questions. All right, let's see what we got here. ASYS. I don't even know what this one is. ASYS. Amtech. Okay, yeah, looks good. It looks strong, actually. Amtech, it only went up 6 cents today. Volume was extremely light. Now, the good news is the previous 2 days, which would have been Friday and Monday, you had pretty substantial volume. Oh, God. Volume on this was 28,000. So when I say substantial volume, you probably had 2 or 3 times that volume, meaning 78,000 shares, meaning for under $1 million, I can control this stock. I could sell this stock into the market. And as long as there are no institutions buying, I could probably take this stock down to like $9 flat if somebody gave me $1 million to do it with. The same is true. If someone gave me $1 million, I could probably make this stock look like gold and push it up to $12. So I don't like this stock just because the volume is 28,000. I'd be extremely cautious. It's like a risky investment, bro, because it can be manipulated. All right, so let's get another one, please. Oh, and somebody said they were going to make a drinking game. Every time I said that I'm on fire, they were going to drink. So yeah, I've been on fire for like, I don't know. I've been talking about it for 9 straight days. Now I get it. During the summer, when I was a little off because volume was dead, people were like losing confidence in Matt or whatever. But let me talk about my recent trade. I mean, I don't want to talk about my recent trades. I'm crushing it. Update on Be Big. I seen your early short clip about it. It's still running. I don't know. You tell me, is it still running? I'm not worried about after hours. The great news about Be Big, when I look at the chart today, is that it seemed to be holding. It had outflow first, and then it seemed to be holding like 720 pretty strong. So the fact that it went to $8, that's great. If it pops after hours or pre-market, that's great. That's what I would do to manipulate the stock. If I wanted to push it higher, I would do it right before close. I would push it probably closer to like 850, 860 so that people could pick up on it at 4 a.m. and start trading that. However, I wouldn't be too worried. If it was under $7 or at $7 where it closed yesterday, remember, it closed at 706. It went down to 551 this morning. If it closed even at 706, I'd be worried because I say, okay, maybe that's the top, Where's the top? But on BBig, again, the number of shares that traded hands, the short position, the amount of money that they're paying to short the stock at 220% annualized, which means it puts them probably at 1% each trading day. So if they're trading $10 million, then that's a $100,000 cost. Understand that, all right? You're trading $10 million short of the stock. So you're short 1.5 million shares, okay? You're paying $100,000. Now the stock moves up. What do you want to do? You want to be at another 100,000 tomorrow, another 100,000 the next day, another 100,000 the next day? No, you're going to start to cover. When you start to cover, it goes up. Retail traders have FOMO. It goes up. I'm not selling. I get what the AMC people were doing now. However, if this shit goes up to 14, I will sell and I'll buy back in cheaper. All right, let's get another question. Yep, that was you. Every time, I know. That's great. You should be totally, there you go. You should be shit-faced right now. All right, let's get a couple more questions. Thank you for watching, love, and thank you for joining me sometimes. Okay, TRIT. I mentioned TRIT 3 months ago that people were shorting it still. I know people don't say that they are, but there were so many put options contracts that expired at the $5 range, and then the calls. So where did TRIT expire last week? I think it closed at like $5.01. So basically everybody got effed, So no, TRIT volume is so low on that one, bro. I bet you volume on that one, I won't even look. It's at 320,000 today. If it were over 320, I'd be shocked. Now this company used to do 3 million in volume. 147,000. Okay, it's a $5 stock. It's 147,000 shares, meaning for $700,000, you could trade the full activity of the stock today. So that's what I mean, where it can be easily manipulated. Now you have to go and you look at open contracts. So I'll help you right here because I know other people were involved with TRIT too. So let's look at the open call contracts. So you take the open call contracts at $5. You got about 800 of them. Out of the money, you got about 1,800 of them. Okay, so you got 800 and 1,800. Then you go to the puts. Now, no one really likes to buy puts on stocks that are $5 because how low can they go? Now, here's the catch. The $5 puts for TRIT. Do you know how many contracts are open? Remember, 800 calls were open. 8,487 put contracts are open for TRIT at the $5 mark. So if I was going to make a wager, I would say by September 17th, that TRIT will probably be trading under $5. And if I had to do something short or long the stock, I would probably short it. Okay? Again, I sold out of this company. I think it was like $7, $6 and change. All right, next question. And I was looking for a spike at one time. I had options in TRIT. It just sucks ass. And there's no doubt about it. It used to do 3 million. Then it did 1 million. And I used to say, wait till it gets to 3 or 6 million again. And it never did. Then from 1 million, it went to 500,000, then 300,000. Traded 156,000 shares today. 147,000, sorry. All right, AMAT. Again, please, if you're getting value here, please give a thumbs up. I'm not a financial advisor. Do your own due diligence, but I try and share everything that I see in the market. And now that I'm using my flow charts, I get alerted instantaneously to unusual options activity. And because I am good with patterns, numbers, charting, and I just have a gift like that to process the information that I'm reading on my phone or computer, I can do it in like a millisecond. I'm like, okay, well, here's what they're buying in. Here's a good entry point. And I share that. I share that with the platform members. Now, other people, like let's take Unusual Whales or something, he'll tweet it out. He'll be like, hey, 600 heavy activity. Then he does a couple pictures, a couple of this. By the time he gives you that information, it's 10 or 12 minutes old. You need your information to be on point. When I pointed out Be Big to my lifetime chat today, it spiked up to $6.88. And I told them, and that was from 620, 640, it spiked to 688. And I said, here's how we'll leave it. The psychology of trading, and then I'll answer your one question. The psychology of trading. Nobody's going to push a stock like Be Big up from $5.50 to $6.60 to $6.88 unless they have a plan of action. So they're not going to buy it and say, I'm going to buy every freaking share until $6.80. And then if they don't have a plan of action, it'll sell off and it'll go back to $5.50. So when you attack a stock, you must have a game plan. Somebody that shoots their load and buys all their shares at 9:30 a.m., you're done for the day. You cannot control the stock anymore. So the smart investors save their money until 3:55 p.m., 3:58 p.m., 3:40 p.m. when the market took a shit on itself and then quickly bounced back. All right, AMAT, last stock, and then we'll go. Oh, by the way, I would love for you guys to share this video. If you're getting knowledge here, again, this is like an after-school special for my platform and available to everybody on YouTube. But please, if you're getting good knowledge here and you like the shit you heard about, even if I didn't speak about your stocks, share the video because you'll come back tomorrow. I will talk about your stocks. In fact, tomorrow we'll do more of my watch list, and then I'll do 15 minutes of questions, Q&As, and we'll talk about your stocks and what I see, and if they make sense to add to my watch list or why not. Like the gentleman that mentioned a stock earlier, it had no volume. I'd stay away. All right, AMAT, let's see where we're at. Sell off 4 out of 6 days. It definitely looks to be consolidating. It's coming right after earnings. Let's see what happens. Yeah, it generally pushes higher after earnings. So I would call this a consolidation right now. So AMAT at $135. If it's consolidating, you could see it bounce up to 142 or 141. Now, if it consolidates again tomorrow, that would be a good thing if you like the stock. If you can get in, what was the low today? 133. If you can get in, if it goes down to 132 tomorrow or 133, because you already know where the low and the baseline was. If it goes to 133, you say to yourself, let me get in. So I see somebody on the side writing Google direction. Yes, Google direction. It's a 4-letter stock. Tech is strong. I told everybody QQQ is being bought up at the end of the day. The tech at the end of the day looked like this, like a J hook. So yeah, that's it for today. I appreciate everybody. Thoughts on V, Visitors, great show back in the 1990s, I think.